If anybody needs to leave the room, please use the door on the back side, not in the front, so that we don't get any disturbance. And we'll start in 2 minutes.
Richard. So we looked at this stuff and found that we forgot to put it in York. I was showing you one downstairs. Yeah, why? Boston nice. I said, why? I'm gonna leave it to you. So I said, I'm correct. Mark would probably say anything. Because he's good with that. So I didn't bother.
Oh, I see. Oh, I thought you were talking about your license. Your license.
Yeah, Boston.
And then, YOHK.
It was just why okay.
I'm gonna kick us off here. Okay. Good morning, everyone. Welcome to the New York City Housing Authority's May 2025 Audit and Finance Committee meeting. Today is Tuesday, May 6th, 2025, and the time is 10 a.m. We welcome the committee members and others to the meeting. We also welcome our external auditors, Deloitte, who are present, and from whom we'll be hearing shortly as the meeting progresses. My name is Ben Brando, Senior Director of Internal Audit and Assessment. It's a privilege to be with everyone today. And thank you to those of you unable to join in person this morning who are with us online via live stream. We covered some administrative items, but just a quick reminder, if not already done, kindly please place all mobile electronic devices in silent mode. And as just discussed a moment ago, please use your microphones that are provided when speaking, enable them in green, and then when not speaking, disable them in red, please, so they are muted. As noted a moment ago, this meeting is being streamed live. As such, it's imperative that all speakers please speak audibly so everyone can hear your contributions to the meeting. And now, for the record, we will have roll call conducted by Internal Audit and Assessment Assistant Director, Neil Agrawal. Neil, kindly please proceed.
Thank you, Ben. Good morning, everyone. Welcome to today's Audit and Finance Committee meeting. So from the Audit and Finance Committee, we have the Audit and Finance Committee Chair, Mr. Gonzalez.
Present.
Independent member, Mr. Mark Kaplan.
Present.
Independent member, Mr. Richard Koo.
Here.
And on my left, we have Benjamin Ward from Internal Audit, Senior Director of Audit.
Here, that's been right now.
Myself, Anil Agrawal, Assistant Director of Audit. To my right, we have Anika Lescott-Martinez, CFO of NYCHA.
Present.
Then we have Amita Patel, Deputy Controller.
Present.
From Deloitte, we have Jill Strohmeyer, Managing Director of Deloitte.
Present.
Then we have Darshan Patel, Manager from Deloitte.
Present.
We have Tony Lim from Deloitte.
Present.
From Finance, we also have Ayat Lee.
Present.
From Audit, we have Avik Das.
Present.
From Law, we have Jason Goldberg.
Present.
Also from Law, we have Catherine McGrain.
Present.
So that's all we have. And Mr. Chairman, we have the quorum in terms of the Audit and Finance Committee members, so we can start the meeting.
Move it.
Thank you very much, Anil. Mr. Chairman and committee members, we have an efficient 3-item meeting agenda this morning. The first item on this agenda is the approval of the minutes of our Audit and Finance Committee meeting held December 9th, 2024. So we have a motion to approve those minutes.
So moved.
That's been moved.
I hate to say it, but I have all kinds of little things here, and I don't want to take up everybody's time. So let's approve them, subject to what I would call non-essential comments, but which are real.
Good.
Thank you. So for the record, some non-essential comments to be covered subsequent to the meeting, but I heard a motion to approve the minutes, and then we would make any clerical or non-essential corrections thereafter. Did I hear that motion correctly?
I move it.
Okay, so moved. So moved and seconded. So all in favor?
Aye.
Okay, wonderful. That's been passed. Thank you. Okay, moving on to our second and third agenda items, which will be covered together in a two-part presentation. We have a report from Deloitte to present an update on the 2024 Annual Comprehensive Financial Report of NYCHA LLC 1 and New York City Public Housing Preservation Trust, as well as an overview and status update on the single audit, including reports to be issued for 2024. I invite Jill Strohmeyer, Managing Director at Deloitte, to begin that presentation.
Thank you. Good morning, everyone.
Morning.
Morning.
I'm going to, the team here today, Darshan, Tony, and myself, will take you through the next two agenda items regarding the status of the 2024 audits for the New York City Housing Authority, LLC 1 and the Preservation Trust. I'm going to start with kind of just describing what we've completed so far, and then I'll pass it to Tony to tell you about next steps. So at this point, we have assessed Deloitte's team independence, which is part of our planning procedures, which we do every year. There are no concerns for me to report as it relates to independence, whether it's team members or other services that Deloitte may have provided or providing to the authority, which is actually, there are no other services in this case. We have updated our understanding of NYCHA, which means having conversations with Anika, Jeff, Amita, and their teams to understand what has changed throughout the year, any material transactions that may have been entered into during the course of the year. And then we modify our audit approach as deemed necessary to either test those or to learn more about those transactions. The same thing on understanding the control environment, having discussions with members of the management team to understand what has changed throughout the course of the year, and again, modifying our testing approach as necessary. Each and every year, we have to determine a materiality by which we conduct our audit under, and we have done that. It's very similar to our prior year materiality. It's a percentage of expenses for 2024 for each of these three entities. So we will use that materiality throughout the course of performing our audits, making testing selections, and ultimately concluding on the audit. We have performed preliminary analytical procedures on the financial statement line items. Essentially, this means we're comparing prior year balances to the current year balances and understanding what has changed. So if there was a significant fluctuation, whether an increase or a decrease, in a financial statement line item amount, we understand more. We ask management questions as to what's driving the increase or decrease, and additional support as necessary. And this is part of our risk assessment process as well, understanding fluctuations from year to year. If there is an account balance that has an unusually high or a high increase or decrease, it's something that we pay close attention to and modify again our audit procedures as necessary.
Excuse me, were there any such?
There were a number of items that pop in our analytical procedures, which we use correct me if I'm wrong, Tony, we use a dollar threshold and a 10% variance. And so if amounts from year to year are both dollar-wise greater than X amount and 10%, then we ask management questions. But every year, there are a number of items that we do ask additional questions on. I don't have those in front of me right this moment, but I can get you a list of exactly.
I'd like to understand that you found some and you got satisfactory answers?
Correct.
That's what I'm.
Correct. We have also prepared audit confirmations at this point in time. There are a number of balances for which we send confirmation requests to third parties to help us confirm balances as of year end. We do that for legal, cash, investments, and debt. So those confirmations are out. We have received some of them back, but some of them are still a pending response from various third parties. Audit confirmations are one of the highest level of audit support your external auditor can receive, so we do place a great deal of reliance on external confirmation responses. So these are critical to performing our audit procedures. We're reading minutes of board of directors and audit committees and other governance committees. Again, understanding what may have happened during the year, if we need to modify our audit approach in any way, or focus on something in more detail. We've also held planning meetings with our audit specialist. Of course, today you have Darshan, Tony, and myself here, but we have a large contingent of Deloitte professionals who support this audit each and every year, which includes many specialists. Information technology, pension, OPEB, and claims are four of those key areas for which we do engage specialists. One area not on here, we also engage specialists on journal entries. So each and every year we have planning meetings with our internal specialists to talk about timing, to talk about what may have changed in the year, and our plan for conducting this year's procedures. On the Deloitte side, these conversations have been held, and our specialists are proceeding forward with testing each of these areas. They're still in process at this point in time as far as the concluding of our audit work, but the planning meetings have been concluded.
Before we move forward, I'd like to ask you a couple of questions. You mentioned your team. Do we still have John Potts, Dan Leff?
Correct. John,
Scott Minker and John Solomon still on board?
correct. So John Potts is our actuarial specialist that covers pension and OPEB. He still is on board. Dan Leff will take care of claims, so anything related to general liability and workers' compensation. Scott Maker is our IT specialist. And then John Solomon, that is actually a change. And correct me if I'm wrong, Tony, we were just talking about this. As we're going through some of our procedures a week or so ago, we were taking a look at GASB 87, which is leases, and GASB 96, which is subscription-based information technology arrangements, and determining whether or not we needed to perform in-depth audit procedures this year, which would involve John Solomon's group. We have concluded that we do not need his assistance this year because the change from last year to this year is rather insignificant.
The next thing that I have is, I hear you say you speak with management, and so I know that you're aware that now we outsource the internal audit team. So when you say you speak to management, does that include the internal audit team? Because I don't think, well, in my estimate, they're not management, they're the internal team. So when you say management, who exactly are you speaking to?
Most of the conversations that take place during the planning stage is with Anika's team, Jeff's team, and Anita's team. However, we will engage in a conversation with Ben here in the next probably 30 days just to talk with him around about his views of the organization. And we're required to conduct a discussion with him regarding his view on risks and fraud as it relates to NYCHA as well. So that will take place. That has not happened at this point in time. But most of the conversations around risk assessment and the auditing of the account balances, those conversations take place with the accounting and finance team.
Okay.
Hi, Jill. Good morning.
Good morning.
You mentioned that the confirmations are still in process. So the question I have is who are we still waiting for, number one? And number two, will we get those confirmations in on time for the June meeting?
Yes.
For your analysis for the June meeting?
Yes, there are, and this is not unusual, particularly related to legal confirmations. There's a rule in the standards that say legal confirmations stale after 10 days. So we really try to time the response from the law firms so that we get those responses 10 days before we plan to issue our report. So those legal confirmation responses are by design not to be replied or received by us until early June. But yes, there are great efforts that the Deloitte team in conjunction with the management team, we go through a process together to follow up, to receive all of the confirmations that are outstanding. Generally speaking, NYCHA's been good where we do receive all the confirmations, especially legal, cash, investments, even debt. But if in the case that one of these confirmations does not come back to us from one of the third parties, there are alternative procedures that we can perform on the audit side. It's option B. We prefer the confirmation to come back, so we do exhaust all efforts to receive the responses, but there are alternative procedures. For instance, if we do not receive a cash confirmation back, which is rare in these days, but with everything being electronic, but if, for instance, we don't get a cash confirmation back, then there are procedures that we'll perform of obtaining bank statements, looking at the bank statements, making sure that those statements are authentic and haven't been altered. And then, rely on the bank statement versus a confirmation. But again, generally speaking, we get the confirmations back. Sometimes with follow-up, for sure, there's definitely follow-up, but we get them back by the middle of June.
Thank you.
Are you good?
I'm good.
Oh.
Thank you.
So this slide talks again about procedures that are in process. It just goes in greater detail of all the testing areas that have been started, including the testing of information technology controls, IT controls. I'm not gonna go through them they're key items on your financial statements. Most of these areas have been started. I have nothing to report at this time. We're still in process. So maybe what I'll do now is I'll turn it over to Tony to take you through next steps, procedures we'll be performing throughout the month of May and into June.
I would like to continue to talk about the next steps we'll be taking in the coming months. In May, our focus will be on several critical areas. First of all, we're performing a testing of GASB 49, environmental and pollution remediation liabilities, with a specific emphasis on lead paint assessment. And we are also performing operating expense and journal entry testing, where we are working closely with our Deloitte internal specialists, as Joe mentioned earlier. And then performing testing of consolidation and elimination journal entries for NYCHA and LLC1 and the trust. Later in the month, we'll be testing the statement of cash flows and testing of draft version of financial statement, and then we will starting its footnotes. Then we can start drafting the management representation letter, and finally we will complete all other testing areas mentioned on the prior slide. In June, we will shift our focus to testing going concern assumptions and testing subsequent events. As Jill mentioned earlier, right before we issue the reports, we'll be obtaining legal letter updates from the legal counsels. On this slide, looking ahead to early and mid-June 2025, we have several key milestones. Our second level review partner will begin reviewing the financial statements by the end of May or early June, and we will present our audit findings to the audit committee. And also we anticipate being in a position to issue audit reports on the financial statements on or shortly after June 12, 2025. So we have a clear plan for the next steps in June and May and June. We are also prepared for the upcoming milestones in June for the reporting phase. I would like to pass it on to Darshan, who
Before I pass to Darshan, any questions from the committee on next steps and where we're going?
You had mentioned earlier, Jill, that part of your analytical process includes risk assessment.
Correct.
Question, you're only focusing in on the risks for 2024, or are you looking at the risks moving forward? And if so, how explicit or how detailed do you get involved in that risk going forward? Financial risk, that is.
Right, so as part of our planning phase of our 2024 audit, we have to perform a risk assessment, which a risk assessment is essentially where are we gonna focus our time during the 2024 audit. Right off the bat, we're gonna be looking at GASB 49, right, a large liability on your financial statements related to lead paint and environmental and pollution remediation. We're gonna be looking at revenues. You have significant tenant revenues, receivables, grant dollars coming in, we'll look at that. But as part of the risk assessment, we're trying to identify other areas that we may need to spend more time on that perhaps in the past weren't a focus. Maybe something has changed in the current year. So the conversations that Deloitte has with management throughout the planning phase, us reading minutes, all of those steps are part of what we call our overall risk assessment process, which helps us again fine tune where we're going to focus during this year's audit. For instance, this year there were a couple of new real estate transactions that were entered into. We learned about that through reading minutes and having discussions with Amita and Jeff over the last several weeks. So we're going to focus this year again on those real estate transactions to make sure the accounting is appropriate in your financial statements. If you didn't have those transactions, we would not be looking at them this year. And we're comfortable with the transactions as the prior real estate transactions that have been recorded in prior years. So our focus wouldn't have been as great. So that's the process we undertake. The analytical procedures is also a step in our risk assessment. When we compare prior year to current year, large fluctuations either up or down could be an indication that something is going on that we need to focus our time on. Sometimes it's very explainable. You had a real estate transaction or you had a new debt come onto your books. And sometimes it's not so evident or so clear. But again, that's the steps that we take to ultimately decide where we're going to land as far as risk assessment and where we're going to focus our time. But we're also, your question about 2025 is very relevant because it's wild out there right now, right? With the administration and I had a ping this morning that National Science Foundation indirect cost rate is now capped at 15%, right? Those are things that are really impacting clients in the public sector, our clients in the public sector, whether it be governments, higher education, or not-for-profits. And so we are thinking about the macro environment and what's going on. And for instance, maybe not quite as relevant here, but I have clients that are for the first time thinking about whether or not they need reserves on grant dollars. If you were to rewind a year ago, a grant dollar was guaranteed dollar in your pocket, right? The thought of having to place a reserve for uncollectability on that federal dollar, you just didn't do it very often. But now I think clients are really having to step back and say, are we getting those dollars from the federal government because of everything that's hitting the news, whether it's going someplace or not, you have to consider it when you're thinking about your business, your operation, your cash flows. I have clients that are really thinking about cash flows quite hard, and if they receive a large amount of federal dollars, and if they're uncertain if those federal dollars are going to make it to their bank account, they're now starting to think, when's the right time to take out a line of credit? When is it most advantageous from a rate perspective? Or maybe letter of credit or line of credit isn't the right avenue, maybe it's a bond issuance. So I have clients thinking about that from an operational perspective because of what's going on in the environment today. And then, of course, you have just the volatility in the markets. You have large swings in the stock exchange, right? In these different indices. And so how are they impacting your investments? And you're a December 31 year end, so a little safe in that respect. But I have June 30 clients where what's going to happen between now and June 30th? And will it have significant impact on pension assets and valuation or just normal investments in our operating portfolios? So we are thinking about all of that. Some of that is not as relevant to the 24 audit, but very relevant possibly to a subsequent event footnote that would be in your 24 financial statements, depending on what things happen or where things land between now and when you issue in June.
Well, just answered the big question I had.
Yeah. You wanna?
Hope I answered the question, Mark.
Well,
You did.
only halfway. The other elephant in the room, as I read in the newspapers, I don't have any firsthand knowledge, but the threat to Section 8 looks really real in terms of the budget that the federal government is coming out with. And that could affect a lot of things in terms of this financial report. Not the least of which is all of the new programs that have been established, as well as all of the individual people getting Section 8 throughout the city. And that's the huge risk that I see going into 2025. So I just wanted to know if you were gonna even think about that, or, well, you addressed some of it, but the safety of the grants, which is the Section 8 grant, is at risk right now, it seems to me. And just based on what I read in the newspaper, I don't know anything more than that. But anyway, thank you for your analysis.
Mr. Koo, happy to respond to that, at least from the management perspective. So late last week, the Trump administration released their president's budget. So the president's budget is just a plan, but it does set the stage for the priorities of the administration going forward. I, in my prior role, used to work on the president's budget, so I have some familiarity with how it works. It is a proposal. It is not a bill, it's not legislation. But again, it does show cuts to Section 8, Section 9. It contemplates a block grant where sort of all the HUD tenant and project-based rental assistance programs would be block granted to either city or states. And it reduces that funding significantly. Just cursory view from our, quick read of it, it could reduce grant funding by about 43 to 44%. So it's significant. Where we are today, though, in the current year 2025, is that we do have a past appropriations legislation that funds us adequately today in our Section 8 and Section 9 program. There's some uncertainty around smaller Section 8 programs this year, like the emergency housing voucher program, which they have indicated they intend to stop providing funding for. We at NYCHA have enough to continue that program, and we have plans, contingency plans for what we would do with those folks to make sure they don't lose their assistance when that program ends. So I think, not to give us any false hope, I think 2025, for the most part, is stable because we do have indications of most of our grant funding. We're still waiting on our federal capital grant, so that could come in the next weeks or so. 2026, though, leaves us from a really tough position. We know that the president's budget, they have Congress. So it is possible that we see some of those cuts. Maybe not in the way that they have planned, because Congress does have the last word, but it's certainly not a good place to start the negotiation. So we, just for your awareness, we're doing a lot of contingency planning internally, and we're thinking really deeply at all levels of staff around what we might do in those scenarios. So we take it seriously.
It seemed, am I on?
Oh, yeah.
It seems to me that the environment in which we all are aware calls for some kind of language that notifies the reader of what you just said, including in connection with this year's audit or this year's financial statement. And many of the people I talk to are trying to figure out the language to use. It varies from place to place, but I presume that in the end, you people, the auditors, see what a lot of folks are doing, and you might be a helpful source for the language that we should adopt here in connection with these financial statements.
I think that's a great point, Mark, and we can certainly help Anika and team with that language. I think there's an opportunity for, well, there's, in my mind, two places you could possibly think about placing this type of language. There's a current economic condition section in the MD&A, which you can certainly talk about what's going on in the environment today in that section. And then, of course, you have your transmittal letter, which is at the forefront of your ACFR, which is another great spot to place this type of language. Or you may decide both places this year is important to have this language in both places. So, but happy to help, and I think you're absolutely right.
On the other hand, I don't want to give away the store by taking a position, but I think that you don't face what I see in the world I live in with public companies having to sweat the question of what kind of disclosure they make in the light of what's going on in Washington.
Yeah.
But it would be, I think, an important way to interact with you to get the best result here.
I agree wholeheartedly with Jill, and in the past during COVID, for example, we included language in one or both of those places depending on the year, so I think it's appropriate to at least flag that, you know, while it may or may not affect where we are today, it is something that management is focused on going forward in terms of the broader economic condition.
You've got to assume that people are reading these financial statements with that in mind, and you don't want to put yourself in a position when you invite one of my brethren who are fond of bringing lawsuits, which we refer to as strike suits, by not having something that's necessary to protect us.
We'll be thoughtful.
I'll turn that off. This brings up more questions for me, but I don't think this is the venue for the questions that I have. My questions now will go towards management with the hope that they've come up with a contingency plan for 2026, because 2025 is going to be a roller coaster ride because of the administration we currently have. I was wondering, Jill, how many Gatsby's will we have to add because of the new administration?
That's a great question. You know what? He might take some away, actually, Victor. You never know. I'm making a joke there, but
Me too.
but it's funny you say that, because I thought I just recently heard in the news that there's a thought to dismantle the PCAOB, which is the Public Company Accounting Oversight Board, and so I say he might roll back Gatsby's, being here kind of jokingly, but there has been some things out there in the news around the PCAOB, so I don't know where that's going either, but there's a lot out there, a lot of talk.
Yes.
So again, my questions will be to management to see what they can actually formulate in the interim, and while we try to survive 2025. Thank you.
I think it's going to be longer than 1 year's survival.
Yeah.
While we have the
We
same
drop the
president.
tax in 26.
Well, it's also, so long as Mr. Trump is president, we might have to deal with these kinds of things.
I think that's right, Mark. I think the first 18 months will be the bumpiest, right?
Yes,
Okay.
put your seatbelts on.
Okay, so if I'll move on to the single audit update, if everyone's ready to move on to the single audit update. And I'll pass it to Darshan Patel to take you through the single audit update.
Good morning.
Morning.
I don't have much update on single audit yet, but I can give you a plan. We are going to start doing single audit in in June, once we receive the schedule of federal awards. But I can tell you, we are planning to do two major programs this year, which we did last year, the Public and Indian Housing Operating Fund and Public and Indian Capital Fund. We'll be doing those two programs, and I may have a Section 8 this year, but I'm not sure, but it depends on your schedule, federal levels, which management is gonna give us very shortly. And we are planning to issue by September 30th, our report on internal controls and compliance.
I would urge you to include the Section 8 as a baseline. In other words, the 2024 should include the Section 8 expenditures, et cetera, so that we have a baseline for when we look at 25, 26. That's just a suggestion, right?
So for the purposes of the single audit, Richard, we get the spend in 2024. So whatever the spend is related to Section 8,
That's right.
that number is kind of what it is. And we will assess that as part of our overall risk assessment on the single audit to determine major programs, so type A major programs and type B major programs. If Section 8 does qualify because of risk factors and dollar amount to be an aid program and major, we will in fact perform that testing this year. I don't recall where generally there's a rotation, Richard, as far as.
You did it 23.
We did it in 23, so whether or not it falls into scope in 24, we haven't concluded that yet, but I do hear you on the additional potential risk factors that's coming out of Section 8, and that will factor into our risk assessment.
It's in two categories. It's in the individual tenants that are receiving Section 8 privately, and it's all the NYCHA new developments that have converted from public housing to Section 8. And those are pilot programs, I guess, or whatever, but those are significant in terms of NYCHA. I mean, that's why I suggest that you
And that
have a baseline for 25.
So they will be in your 24 SEPA, and then they'll be all of this will be considered when we perform our final risk assessment for the SEPA and determining type A, type B, and major programs.
Just something I'd like to add, just as a comment. Being that the Preservation Trust is now past its infancy, and we didn't have enough detail in the last audit, I'm sure the numbers are gonna change now that they move forward. Is that a good assessment?
As far as the numbers,
The dollar values.
I'm not certain I understand
When
the
you-
question,
you-
Victor.
There was a statement in one of these that I read. You know what I'm referring to?
Mr. Gonzalez, correct me if I'm misinterpreting. In the last year, we said essentially that there weren't any significant expenditures for the trust yet.
Correct.
But in 2024, there have been expenditures. The trust is going to be included and Deloitte will be doing testing. And Jill, if I've missed something.
I'm sorry, I didn't understand the question at first, Victor, but this year will be the very first year that the Preservation Trust has a standalone audit. So Deloitte is performing your inaugural audit of the trust this year. And while it is rather small from a component unit perspective, I don't wanna underplay the complexities of preparing financial statements for the very first time and the thought process that management is going through to make certain those numbers are correct, because it's not easy. So it is being worked through right now. The team is going through performing testing. Because it's an inaugural audit, we do perform more testing because there's no baseline, there's no history. So we generally look at almost everything in a first year set of financial statements. And so we're Tony and the team are going through that as we speak, testing some of those balances.
Thank you both.
I just have one more point to add to the single audit. We're going to follow up on your material finding you had in public and Indian operating fund. regarding the lead programs.
Yes.
Just an amusing aside, if you have somebody in this administration we have looking at this and having fun and saying, what the devil you're doing with Indian housing? When the first time I saw it, I raised the question. In effect, if we could find a way of not saying that, it's too easy for somebody who's looking to make trouble to poke a finger at that one, even though it's a law.
One of the program also had the extension of Florida. Do you remember?
Why?
Hawaii.
Mark, I hear you. I completely understand your question. The name, when you have an ALN number, so this happens to be 14.850, there is a database of all of these program numbers in a database, and so we type in 14.850 and out comes the name, and that name is used by everyone who has this ALN number. And whenever this program was created, I'm guessing many, many years ago, this was the name that was given to 14.850, and it hasn't been changed, so you're stuck along with everyone else who has dollars in this program, stuck with the name of Public and Indian Housing.
I assume as much, I thought I'd just.
I just wanted to just make, you're gonna see it again, probably, in the single audit report, so.
Sure.
And that's what the department at HUD is called to this day, PIH, Public and Indian Housing.
Okay.
Thank you.
Thanks.
Yes, that concludes our prepared remarks on where we are as far as status of the 2024 audits, both the financial statement and single audits. But any other questions from the committee, happy to answer them.
Thank you, Jill, Tony, and Darshan.
Well, let me just point out that in the minutes we have, it says you explained Deloitte does not plan to adopt a control reliance strategy. Was that what you just described?
So a control reliance strategy is one you would see in a public company setting, Mark, where you test controls to, one, issue a report on internal controls, and two, to reduce your substantive testing. Generally speaking, in an AICPA audit, which this is, we don't take a control reliance. We are still going to look at your internal controls. We are gonna look at the design and implementation of those controls, but we won't take it to the third and final step, which is testing operating effectiveness. Operating effectiveness is what you would have to do in a public company setting in order to issue that report on internal controls. We stop in an AICPA audit at design and implementation. But I say that, but we still gain an understanding of your internal controls. That is something that every auditor has to do, regardless if you're a public company or just a private company or a government like NYCHA. So that statement is we don't take a control reliance to reduce our substantive testing. So we essentially make more detailed selections. We'll make more expense selections. We'll make more revenue selections because we're not taking control reliance.
I got it. But we'll deal with the minutes later.
What was that, Mark? I'm sorry.
I thought I'd have the opportunity to go through the minutia in the minutes at some point.
Okay, sure.
We will do that separately. Thank you very much. Thank you again, Jill, Tony, and Darshan. That concludes our business for today. There being no other matters to be addressed on today's agenda, Mr. Chairman, I want to thank everyone for their attendance at this meeting, and a motion is in order for adjournment.
Okay. So, second.
Moved and seconded. All in favor?
Aye.
That's been carried. Thank you all very much. For planning purposes, our next Audit and Finance Committee meeting is scheduled for Thursday, June 12th, 2025 at 10 a.m. We look forward to seeing you again then. For the record, the time is now 10:43, and today's Audit and Finance Committee meeting is hereby adjourned. Thank you all again.